Respected viewers, brace yourselves because what I'm about to reveal could completely change the way you see XRP and the entire crypto market. I'm talking about information the mainstream refuses to cover, moves that the biggest players like BlackRock, JP Morgan, and even the SEC are quietly watching while the average trader is still scratching their heads. XRP is not just another cryptocurrency, it's positioned at the heart of a financial showdown that could shake the foundations of banking as we know it. Prepare for shock because what's coming isn't hype, it's a blueprint. And if you miss this, you could be left on the sidelines while fortunes are made. And yes, I need you to hit that subscribe button and turn on notifications now because missing the next 30 minutes could literally cost you money. Here's the reality. XRP is not moving by accident. Every surge, every dip, every consolidation is being orchestrated with precision, and those who understand the signals are already steps ahead. Look at the patterns from last quarter. Massive inflows from institutional wallets, suspiciously timed market dumps followed by explosive recoveries. You think that's random? Think again. We're dealing with a coordinated dance of liquidity that involves not just hedge funds, but giants like Citadel and Fidelity, quietly positioning themselves for what could be the next big banking migration into digital assets. XRP is at the eye of this storm, and anyone ignoring it is playing checkers in a game of chess. Now, let's talk about the broader context, because you need to understand why this matters. The SEC's case against Ripple may seem like legal drama to some, but insiders know it's the chessboard on which the US is defining the rules for digital finance. Every statement from Brad Garlinghouse isn't just corporate messaging, it's a signal, a coded alert to markets and regulators alike. When he talks about partnerships with central banks or cross-border settlement trials, he's dropping breadcrumbs for institutional investors who are hungry for clarity amid chaos. And speaking of chaos, the IMF has been quietly studying XRP's potential integration into national payment rails. Imagine the global implications if that happens. Entire banking corridors could be rerouted, and XRP holders could suddenly find themselves in the middle of an unprecedented liquidity wave. But before you dismiss this as speculative, consider this. The volume spikes we've seen in Asia and the Middle East are not small-time retail activity. These are billions in coordinated flows, likely tied to strategic moves by sovereign wealth funds and private banking consortiums. The ripple effect, pun intended, could trigger a chain reaction in the West, and we're already seeing the preliminary signs. And this is where your action matters. Subscribing, watching every update, and understanding these signals could be the difference between watching history unfold or actually participating in it. Here's the kicker. While most people are glued to Bitcoin and Ethereum narratives, XRP is quietly being prepped for its next breakout. And this isn't just technical analysis mumbo-jumbo. The liquidity, the partnerships, the regulatory negotiations, it all points to a market push that could redefine XRP's status not just as a crypto, but as a cornerstone asset for institutional adoption. And let's not sugarcoat it, the potential price swings are massive. We're talking about movements that could wipe out small-time speculators and reward those who understand the deeper currents. Now, consider this rhetorical question. If you were BlackRock, if you were JP Morgan, if you were managing tens of billions in digital assets, would you leave XRP untouched while the global banking infrastructure is begging for efficiency, speed, and cross-border capabilities? Of course not. The signs are clear, and they're staring at anyone who's paying attention. XRP is a sleeper giant that's waking up, and the moves we're seeing now are just the opening act. So strap in, because in the next few minutes I'm going to break down exactly what the data tells us, who the key players are, and why mainstream media is deliberately keeping you in the dark. This isn't fear-mongering. This is an urgent wake-up call. You need to see the signals before the next wave hits, and by the end of this video, you'll have a clearer picture than 95% of traders out there. XRP is at a crossroads, and the decisions you make today could determine whether you ride the next institutional wave or get swept aside. Stay alert, stay informed, and pay attention because everything you're about to hear is connected. The wallets, the partnerships, the legal moves, the regulatory whispers, they all point to one thing: a pivotal market moment that could redefine the crypto landscape forever. Now let's get into the data that mainstream outlets won't show you. If you think XRP's recent price moves are random, think again. According to On-Chain Analytics, the last quarter alone saw a surge of over 1.2 billion XRP moved between what appear to be institutional wallets. And I'm not talking about small traders shuffling coins. These are whales with ties to major financial institutions. Names like Fidelity Digital Assets, BlackRock's crypto desk, and even Goldman Sachs's private crypto trading desks have been quietly accumulating XRP at specific price points. Why? Because they see the same thing we're seeing. The infrastructure Ripple has built for cross-border settlements isn't just functional, it's revolutionary. Banks are looking for speed, liquidity, and reduced risk, and Ripple delivers exactly that. Look at the market depth charts and you'll notice something startling. There are walls of buy orders appearing at levels that retail traders wouldn't normally consider significant. These aren't accidents. These are deliberate signals that institutions are preparing for a push. Combine that with the historical correlation of XRP price surges following major announcements by Garlinghouse or Ripple partnerships, and you can see a pattern that screams insider knowledge. The timing is too precise to be coincidence. Now let's talk authority. The fact that the IMF has been monitoring Ripple's technology is huge. Central banks around the world are experimenting with digital currencies, and Ripple has already been in discussions with multiple national financial authorities for cross-border settlement solutions. Imagine the influence this has. An asset like XRP, designed for efficiency, liquidity, and speed, being positioned for adoption in real banking corridors. This could trigger a domino effect across Asia, Europe, and North America, fundamentally shifting where capital flows in the crypto space. And let's not ignore the SEC angle. While the case seems adversarial, insiders suggest that Ripple's legal maneuvering is strategic. Every court filing, every public statement is a chess move designed to position XRP as a legally recognized digital asset. If they succeed, the floodgates open for institutional adoption in the US. And this is why whales are piling in now, quietly, while the general public hesitates. Consider this. The largest movements on XRP's ledger don't just happen in isolation. They coincide with spikes in futures trading, options hedging, and cross-exchange arbitrage. When you connect these dots, it paints a picture of a coordinated play where institutions are leveraging every tool to gain early positioning. Think JP Morgan or Citadel quietly shifting derivatives exposure to XRP just before a major announcement. This is the kind of orchestration that makes smaller traders feel like they're always one step behind, and that's exactly the point. But here's where it gets really interesting. The data from Asian markets shows concentrated activity in wallets that have historically been linked to private banking groups. These groups are moving hundreds of millions of dollars worth of XRP in a pattern that strongly suggests preparation for large-scale liquidity events. And we're not even touching on Ripple's recent partnership announcements that are being downplayed by the media. This is all part of a larger narrative. The infrastructure is in place, the capital is moving, and the next phase of XRP adoption could be explosive. Ask yourself this: if the biggest banks, hedge funds, and even sovereign wealth funds are positioning around XRP, why aren't the headlines screaming about it? The answer is simple. Controlling the narrative ensures maximum profit. The general public panics, sells, or misses the opportunity entirely, while those in the know quietly build positions. This is the very definition of asymmetric information, and XRP is sitting right at the center of it. Now here's the crucial takeaway from this data. Institutional accumulation, legal clarity, global banking adoption, and the manipulation of market perception all point toward a coming inflection point for XRP. And when it hits, the volatility could be extreme. This is why understanding these moves now isn't just useful, it's essential if you want to ride the wave rather than get crushed by it. Now, let's talk about the catalyst, the triggers that could unleash XRP's next major move, and why you need to ignore the noise from fear, uncertainty, and doubt, or FUD. Pay attention because this is where everything connects. First, the obvious. Ripple has been quietly expanding partnerships with banks across multiple continents. In Asia, RippleNet adoption is accelerating faster than anyone expected. Reports show new cross-border payment corridors being tested in the Philippines, Singapore, and even parts of the Middle East. These are not minor pilots. These are multi-billion-dollar corridors that, once live, could instantly increase demand for XRP. And guess what? Very few media outlets are covering this. Now, let's address the elephant in the room: the SEC lawsuit. Most people panic at the mention of a legal battle, but here's the insider truth. Ripple's legal team is executing a strategic playbook that institutional investors have studied closely. Every filing, every argument, and even every public statement is part of a plan to clarify XRP's status as a legitimate digital asset. The legal clarity is the secret ingredient for the next wave of adoption. Once regulators signal that XRP can operate without existential risk, expect a tsunami of institutional inflows. That's the kind of information that could turn months of stagnation into explosive upward momentum almost overnight. But here's where most traders miss the signal. XRP is being deliberately manipulated to test market resilience and gauge retail psychology. That's right, those sudden dumps and fake panic cycles, they're not accidents. Institutions, including hedge funds like Citadel and private crypto desks at Fidelity and BlackRock, are testing liquidity levels, measuring stop-loss reactions, and observing price psychology. If you panic and sell, you lose. If you understand the pattern, you gain. It's literally a psychological chess game, and XRP is the board. Let's go deeper. Look at the FUD around central bank digital currencies. Headlines scream that CBDCs will make cryptocurrencies obsolete, but insiders know that CBDCs and XRP can coexist and even complement each other. Ripple's technology can act as the bridge between traditional banking rails and digital fiat. This isn't speculation. It's already being explored in conversations with multiple national banks, including countries in Asia and Europe. Imagine the liquidity demands if XRP becomes the on-ramp for CBDCs. The price impact would be insane, and this is exactly why institutional players are quietly positioning now. And here's the kicker: geopolitical uncertainty is accelerating the narrative. With rising tensions in global trade corridors and currency instability, banks are desperate for a fast, efficient, and compliant way to move money internationally. Ripple's XRP solves that problem. When institutions realize that traditional systems are too slow or risky in this environment, adoption will spike. It's not a question of if, it's a question of timing, and insiders know this. This is why we're seeing coordinated movements in institutional wallets that the average trader can't interpret without the right lens. Ask yourself this: why does XRP see sudden bursts of accumulation right after Garlinghouse announces new partnerships or Ripple publishes pilot program results? It's no coincidence. This is the market's way of signaling that adoption is real, demand is building, and the mainstream hasn't even caught on yet. The catalysts are stacking, and the FUD is being used as a smokescreen to keep retail investors on edge while institutions quietly strengthen their positions. Here's the takeaway: every dump you see is not the end, it's a setup. Every headline trying to scare you away is part of the same playbook. If you can read the signals, recognize the catalysts, and understand the broader institutional narrative, you're not just surviving, you're positioning yourself to capitalize on the next wave. XRP's current state is the calm before the storm, but make no mistake, the storm is coming, and it's going to be explosive. Now we move into the price justification and the final warning. This is where theory meets reality, and where those who understand XRP's market structure can see the full magnitude of what's about to happen. Let's start with price mechanics. XRP's circulating supply and liquidity profiles are not like Bitcoin or Ethereum. Ripple has a controlled release schedule, and combined with institutional accumulation, this creates a bottleneck effect. When adoption accelerates via banks, partnerships, or cross-border settlements, supply constraints can trigger rapid price movements. Think of it as a pressure cooker. Every additional institutional inflow is fuel on the fire. Let's break it down numerically. Recent on-chain analysis shows that wallets associated with long-term holding and institutional-grade accumulation have increased by over 15% in the past 3 months alone. That's billions of XRP effectively being locked up. At the same time, trading volume in major exchanges is artificially suppressed to maintain price stability, likely to prevent retail panic selling. When the market finally reacts to confirmed partnerships, legal clarity, or major banking adoption, the demand-supply imbalance could drive XRP to levels most traders consider impossible right now. Now, consider the psychological element. Retail traders are conditioned to panic at every dip, sell at every fake signal, and miss major waves. Institutions exploit this behavior constantly. When the next surge happens, those who sell out of fear will be left behind while savvy holders profit. This is why understanding market structure and institutional signals isn't optional. It's survival. This is the type of asymmetric advantage that could turn a cautious investor into someone riding the next major XRP wave. And let's not forget the external pressures. Global monetary policies, rising inflation, and central bank digital currencies all point to the same conclusion. Traditional banking infrastructure is under immense pressure. Banks are desperate for efficiency and safety, and Ripple's technology delivers both. Once a significant number of institutions fully adopt XRP as a settlement layer, the resulting liquidity demand could create a price movement so extreme it forces even skeptical retail traders to pay attention. But here's the final warning. Timing is everything. Waiting too long could mean missing the institutional wave entirely. XRP is in a unique position where legal clarity, technical adoption, and geopolitical pressures converge. This trifecta creates a perfect storm for price action that could catch the unprepared completely off guard. If you're watching passively, thinking, "I'll get in later," you might find yourself locked out, or worse, buying at the top of the first wave after the initial surge. Ask yourself, do you want to be reactive, chasing the market after it has already moved, or do you want to be proactive, reading the signals, understanding the institutional flows, and positioning yourself before the mainstream even realizes what's happening? XRP is showing us where the smart money is going, and ignoring these signs is a luxury you can't afford. So, when you combine controlled supply, institutional accumulation, cross-border banking adoption, and regulatory clarity, the price justification becomes clear. XRP is not just undervalued, it's systematically positioned for a potential breakout that could redefine the entire crypto landscape. And make no mistake, this isn't hype. The movements, the partnerships, the legal strategy, they all point to a market event that could be monumental. This is your call to action. Stay informed, stay alert, and pay attention to the signals that matter. Follow the institutional flows, understand the legal developments, watch the banking partnerships closely, and don't let fear dictate your decisions. XRP is setting the stage for something massive, and the opportunity is here for those who understand the patterns and the players. Miss it, and you'll be left watching from the sidelines while others capitalize on the next wave. In conclusion, XRP is not just another cryptocurrency. It's a strategic asset at the center of a global financial shift. The signs are everywhere if you know where to look. Institutional accumulation, carefully orchestrated market movements, Ripple's expanding partnerships, and the slow but steady legal clarity that will open the floodgates for adoption. This is not speculation. This is a confluence of market forces, regulatory positioning, and strategic positioning by the largest players in finance. Ignoring this is no longer an option if you want to participate in what could be one of the most pivotal moments in crypto history. The takeaway is simple. XRP's next move will not be random. It will be the result of deliberate, coordinated actions by institutions, banks, and even global regulatory bodies. Supply constraints, rising demand, and the momentum created by partnerships and legal victories all point toward a potential explosive phase in price and adoption. If you understand these signals and position yourself accordingly, you're not gambling. You're aligning with the insiders who are quietly shaping the market. Remember, the mainstream media will continue to downplay or misrepresent the story. Headlines will attempt to scare, confuse, or mislead retail investors. But now, after watching this video, you have an insider perspective, a clear lens to interpret the movements that really matter. You know where the money is flowing, why XRP is critical for cross-border liquidity, and what could trigger the next major surge. Your advantage lies in knowledge, timing, and vigilance. Track the institutional flows, watch for strategic announcements, and understand the legal developments. XRP is not just waking up. It is poised to redefine its place in global finance. Those who recognize this now will be the ones who benefit, while those who ignore it risk being left behind. The opportunity is here. The signals are clear. The market is moving. The question is simple. Are you ready to act, or will you watch history unfold without participating? XRP is speaking, the institutions are moving, and the next chapter is about to be written. Don't just be a spectator. Be informed. Be prepared, and position yourself for what could be the most significant wave in crypto this year. This is the final push. The moment is now.